Hey, what is going on, everybody? Welcome back to Big Gauchos. It's talking about shows, but pockets up on money, pocket Boston. Back with the boys.
Hey, what's up, Big Gauchos? It's your boy, Big Gaucho Tyler. We back with another banger video. We got a lot of heat for you today.
What's up, guys? It is Big Gaucho Dave. We are back at it again. It is Friday for you all, and we have an awesome video coming up. But before we get started, make sure to like, comment, and subscribe if you're new to the channel, or if you watch this a lot. But just subscribe and like. It really helps us to stay motivated. It helps you guys find our content and make some comments. Say who you like the most and who you like the least. Hopefully, I'm not the least, but I could be the most. Maybe, I don't know. We'll see.
Never know. We'll do a grand total in the comments, but after you're done doing all that, we got what you came here for in the thumbnail. GameStop could be back for round two. It was looking pretty crazy at the beginning of this week. They rallied over 300% on Wednesday, and they topped out more than $170 after hours. So regular trading, it was only about $96, and then it just exploded. It was it was at like 47-ish on Monday, and then dipped to about 43 on Tuesday, and then Wednesday it just went insane. Could have been triggered by a change in CFO at GameStop. That's what people are like saying was the cause, but I think it was just the inevitable run up happening again, and that's exactly what Reddit did. They ran with it. But keep in mind, if you're looking at it still, volatility on the stock is extremely risky, and can go up and down hundreds of dollars. And we've seen some pretty crazy swings this week. Currently, I read that there were $800 calls available expiring tomorrow. So if you're feeling pretty risky, you can jump on those, but it just shows you people are stopping at nothing to bet on GameStop.
Oh my God, that's crazy.
Scary.
They lost $1.9 billion in 2 days. Quick thought. Do we think that these short sellers or these corporations like Citadel and I forgot the other one, but do you think they're gonna Melvin Capital Group? Do you think they're gonna pull another Robin Hood on us and just completely halt the trading again, or is it finally like done? Like they're not gonna touch it and just let the people roll with it?
I don't know. They were halting it a few times today during trading, but I don't know if they're gonna like do those restrictions that they had before. I think that would be a pretty bad PR move for any brokerage, really.
Yeah. I mean, they do halt trading every now and then if it gets like super crazy. That's pretty standard, but I don't think they'll do what they did before, and they restrict trading for like days on end. That's pretty absurd.
Yeah, it was pretty bad.
I saw that Robinhood sent out some messages to at least to my account saying that some other brokerages are restricting some trade, and like it's not us this time. So I thought that was a really funny message I got from them saying like, hey, don't come at us this time. Like we already had enough of the backlash.
It's not us. We get blamed for everything. Yeah, well, maybe you shouldn't have done it on the biggest brokerage online. Probably not a good PR move.
Definitely.
But the short sellers have lost $1.9 billion just in the last 2 days due to this rally. So everybody's still getting pummeled pretty hard if you're betting against GameStop. And their short interest is currently over 30% of their shares.
I know it's still an insanely high number. I mean, I don't think they're really ever trying to get out of their short position. I think they're just maybe getting out temporarily and then waiting for the run up and then shorting at the top. That's what they probably did last time. They probably shorted it when it was back at that $450 peak just to reallocate their position.
Oh, I see.
So I think they're just playing a game. Like, obviously they lost money. They lost a lot of money, and they probably won't recoup all their losses, I don't imagine. But they're just trying to mitigate their losses by shorting at peaks and then buying back and then letting it run up a little bit and then shorting it again.
Yeah, I mean that makes a lot of sense. I don't know that it's something that I would try just because it's pretty unpredictable, but at some point it does have to go back down, but it also does have to go up because those shorts are still outstanding. So
that's true. And we'll see how long they can continue to pay off those interests on their short position. Maybe they'll just hold on to it and hold on to their short for an entire year and wait for this to cool down.
They're gonna have to.
No, GameStop to the moon. What do you guys think of GameStop? Buy, sell, trade, hold, what?
It
Bought
depends on what
Monday.
your risk tolerance is, honestly.
Yeah, this is even higher risk than Bitcoin almost. I broke even on Levi's on Monday, and so I sold it and took the money from that, put it in GameStop on Monday, just as like all in, like I don't care what happens, and then it hit, and that was nice. But yeah, I mean it there's really no like way to predict it. It's really just gambling. I mean, I that's all I can chalk it up to, honestly.
Yeah, so yeah, Austin he went in on GameStop a little bit. Can't remember how much he went in, but he went in for a pretty good amount. And GameStop was trading sideways pretty much for the last couple of weeks, and then I think it was on Wednesday afternoon.
Wednesday, yeah.
He texted us. He's like, "Oh my god, guys, GameStop went up $2 since when I bought it. Should I sell?"
That's right.
I looked at the text and I'm like, what the heck is this guy talking about? I said, "LL, no." And he's like, "Okay." And then after hours, it jumped up to like $140, $170, and that's when he sold it then. So
Yeah. Yeah, because I was like, because it was moving so slow and it was like trending down. I'm like, dang, dude, this isn't gonna happen. I was like, what do you guys think? Should I just like sell it even and just like take the money and like whatever? And then I was at work and I wasn't looking at Robinhood. I forgot to sell it, and then I got a notification that was like, GameStop is down to $86 in after hours. I was like, down to $86. I was like, what? And then I opened it, it's $120 in after hours. I was like, oh dang, dude, like sell all, please.
Free money right there.
pretty
That was
insane.
crazy. I credit the boys with the success on that. They encouraged me not to sell. And as Jordan Belfort said, I'm not selling.
Yeah, throw it back to last episode.
Fantastic.
I don't know. I don't want to touch GameStop. I don't want to touch it at all. I'm if you are in it, might as well just hold. But I don't know if it's a good time to get into it. I mean, if you just want to toss your money out, it's like going to the casino and tossing it on 21. You just toss it in there, and you probably won't see it ever again. But I guess with GameStop, you probably would see it again, but it could potentially be like half of what you saw in the first place.
Yeah, unless you're Tyler and you hit eights twice in a row on roulette.
Yes,
Yeah.
sir. Yeah, I'm with you, Dave. I don't have any buying power, so I'd probably stay away from it. If I wasn't in AMC, I might have just YOLO'd it and just throw it in there to see what happened. But as of right now, I'm probably gonna short GameStop because it's gonna go back down. If I really had to make a play and I had the capital to do it, if GameStop breaks 200, I'm probably getting in a short position. But that's just me.
Yeah, I would agree. I don't think it can go too much higher, but it's ups and downs. It's kind of like a roller coaster, kind of like Beyond Meat is doing.
Ooh, yeah, this is a good story. So Beyond Meat just went absolutely insane in after hours. They first dropped quite a lot. I think it was down 15% because they had some earnings report come out after trading was over, and it was not looking good for the stock. It was pretty yucky poo earnings report. So they reported losses of $21 million, which is about 34 cents a share, which, all right, I mean, it's not too bad compared to some tech stocks. They drop like $8 a loss per share on average when they report earnings. But they generated $102 million about in revenue. But both of these were a little bit short of estimates. Not really the revenue so much, but the losses were really short in estimates because the analysts estimated about 14 cents a share loss, and they exceeded that by 20 cents a share. So that's pretty significant. So they had a lot of costs that analysts didn't really take into account, and that caused the stock to drop a lot. But then, minutes later, I think, not saying it was intended this way, but it kind of looks like it was intended because it was like they released the earnings, the stock tanked, and then all of a sudden they released this news and it just skyrocketed. So right afterwards, they released news saying that they have exclusive deals with McDonald's and Yum Brands for the next couple of years. and that caused the stock to jump up 26% to close up about 10% above in after hours. So that's a pretty insane roller coaster. You know, you just went like boom, boom.
Insider trading.
Oh
It
yeah.
kind of looks like that, honestly, in some ways, because they had terrible news come out, and then all of a sudden it dropped. And you know, if you were in on the news somehow, in some way, if you knew somebody or something, I don't know, something can happen sometimes, I guess.
Not
And you
saying
could've bought
anything,
then
but
and make 26% profit in about 2 seconds.
that's so crazy. That'd be so wild. That's best stock market payout ever, honestly. I don't know if it's like, I don't know if this is like a long-term stock because of, I feel like a lot of it's popularity driven just because like fake, what am I trying to say? Like fake meat's kind of trendy.
Yeah,
Like
the vegan
plant-based
lifestyle
meat.
and stuff.
Yeah, vegan lifestyle. That's what I'm thinking.
What's
But
their competitor?
Their competitor's
I
Impossible
forget.
Meat.
Yeah.
And
Possible.
apparently Impossible has been kicking Beyond Meat's butt because they've been dropping their prices a lot. Like they've dropped it 3 times this year by 10% or more, and it is way cheaper to get Impossible Meat than to get Beyond Beef. So that's like the biggest concern by some analysts, that they don't think Beyond Meat is going to be able to compete with Impossible because of the stark differences in terms of like the grocery store products.
Yeah, honestly, I mean, they came out at the same time and it's pretty much the exact same product. So I don't blame people for like not really knowing the difference, thinking it's the same thing. Honestly, I don't really know what the big difference is one way or the other. I would probably just go for the cheaper one too. And then that's more likely to get distributed in big grocery store chains. So probably a smarter move to drop those prices.
But maybe they'll go into the fast food business because they have an exclusive deal for 3 years with McDonald's. They will be supplying the patty for the McPlant, which is a disgusting name. That needs to be changed immediately. I am not going to go to McDonald's and say I want a McPlant because that just seems really weird. But in
Sounds
addition
like
to
grass.
that, in
We get
addition
that
to
McPlant burger, big guy.
honestly, it sounds so stupid. But in addition to the McPlant, they're also going to help develop some new plant-based items. So I'm not sure what that means. Maybe like a McPlant flurry or something. I don't know.
McPlant rib.
Sounds so gross. Ew. It still has bones in it, but it's all just like grass, like glued together with barbecue sauce.
Jesus.
So nasty.
I mean, Beyond Burger has been a fan favorite of the Big Gauchos since our first videos when we did the Impossible Burger with Burger King, I think, or was it Beyond Burger?
It was Burger King, yeah. R.I.P.
Yeah.
Burger King.
Yeah.
So, I mean, they have potential. Like, there's definitely a market, but if they can't compete with prices with Impossible Burger, then they're probably not going to be able to be as sustainable or profitable. I'm honestly, this McDonald's news is really big for them. This is honestly probably going to save their company and their shares. If it hits for these next 3 years and they resign like an extension or get into more fast foods, then they definitely have some type of market share control. But I think it's a little bit more risky in my end. So I think if you have some, hold it. But I wouldn't buy into it.
Oh yeah, I forgot to mention they also have a deal with Yum Brands. I'm not sure how long that is for, but it's for the next couple of years at least. And Yum Brands, if you guys don't remember, is KFC, Pizza Hut, Taco Bell, those types of restaurants. So I'm not really sure about KFC. That seems kind of weird. Like, like
Yeah, they don't have beef.
chicken, plant chicken,
I don't know about Pizza Hut either. Like plant pizza.
sausage. Yeah,
Yeah, I
you get
mean,
the
like-
sausage is a plant.
Yeah,
I
that's
guess, but
it.
like if you're vegan, you don't eat cheese.
Well, maybe they'll get plant cheese too. I don't know.
Yeah, I mean, I guess it works if you're vegetarian too, but yeah, I mean, Taco Bell's meat's already questionable, so I probably wouldn't notice the difference if it was plant-based anyway.
Did they have like horse meat in their tacos at one point, or is that just like something I just made up?
Yeah.
Or is that Jack in the Box?
That was Jack in the Box. Horse meat tacos. Taco Bell's meat was like 60% soy fillers or something, and like barely any actual meat. That was what the thing was.
I don't know. Taco Bell still smacks. I love Taco Bell. I don't care what you guys say about Taco Bell. I still will eat there.
Fair enough.
Yeah,
It is
I eat
it
that
is
too.
good. I like a Baja Blast and a Frito burrito, but
Heck yeah.
that's just me. I agree with Big Gaucho Tyler. I don't really think it's a buy. I think it's too much risk for not enough reward. It's not going to be one of those. I think a lot of people are just expecting like every stock to go crazy, like GameStop and AMC and those kinds of things. That's not a normal expectation, and certainly not the case with Beyond Meat. So I think you'd be taking on too much risk for not enough money.
Yeah, no, Beyond Meat's trash.
End of discussion.
Yeah, I mean, I would not buy Beyond Meat. I'm being honest.
Yeah, I wouldn't either. I'm staying far away from it.
Respect.
Back into GameStop.
Honestly, yeah, I'd probably buy GameStop before I buy Beyond Meat.
Yeah, really. Dang.
But what's this news about Netflix?
Yeah. So Netflix, hates Disney Plus. We've seen how Disney Plus has been taking over right now with their 95 million subscriptions. Well, Netflix is like, you know what? Let's expand. Let's go into other countries, and they're planning on spending another or $500 million to create more original content in South Korea. So in 2020, they have gained 3.8 million subscribers from South Korea, and they're looking to expand it even more. It was told in a report that within that area that it's very popular and growing rapidly. So definitely some good diversity coming along with Netflix going overseas. Originally invested $700 million into the growing country, and they have currently 70 shows made, and hopefully plan on expanding more throughout the years.
It's interesting. Yeah, I think that is a good opportunity because I'm not sure if you guys have seen like some Netflix shows, but there's been a couple of really popular horror movies that came out of South Korea recently. I'm not sure if you guys watched or not, but it was called like Train to Busan.
I heard of that one. I heard it was really good.
It
And then,
was really good, yeah.
What was that other one that won a bunch of awards last year? Where the director was like really popular on Twitter and stuff.
I'm not too sure,
Not sure about.
honestly. But there was another horror movie that came out. Both were zombie movies. Like I like horror movies, so that's usually what I watch. They were really good. I mean, if you don't mind like reading the subtitles, but they did a pretty good job on both of them. I mean, unfortunately now Train to Busan is no longer on the American version of Netflix, but I guess if you have a VPN, you can just switch over to South Korea, and I'm sure it's probably on there.
Oh yeah,
Dang, that's
definitely.
crazy. Oh, it was called Parasite.
Oh, okay.
Oh yeah,
That movie,
was it.
that South Korean one that was really popular, that horror
Yeah.
movie. Yeah, that's the one. Yeah, I mean, I think that's a cool investment. I think a lot of people they're really into expanding their horizons, especially during the pandemic where there's not much else to do. So I think it's a cool move. Showcase other cultures, and yeah, good investment.
Yeah, I think South Korea is a really good place to go into because they have a culture that's a little bit different than ours in terms of what they like value, I guess, if that makes sense. Like
Very
South
big into
Korea,
pop culture style and all that. Very into
yeah,
that.
yeah, they're really into pop culture. They're really into esports compared to conventional sports. And I guess, movies too. They're a lot more digital than we are in America. They're way more open to, the digital environment.
Oh
Pretty
yeah,
cool. I'm with it.
great
Yeah,
move by
I mean,
Netflix.
yeah, I agree. Can't hurt to learn something from South Korea in this case.
So is Netflix a buy?
See, that's where it gets tricky, Dave. So
It's a boomer stock. It's a long term.
it is a very long term. Yes, it is a buy if you see it like that. But if you compare it to their competitors like Disney Plus, who's expecting to at least double their subscriptions from this year, I think you'd probably get more of your money back with Disney because they own everything, especially in the US. They could probably gross more.
Yeah, especially with
Um,
ESPN.
Netflix, though, I mean, nothing against them. If they continue to go into other countries and start like promoting their platform and creating original content for the countries that they go to, then yeah, it's a no-brainer. It's a buy because the more they get into it, the more subscriptions, the more money.
Mm-hmm.
Yeah,
I
that's
think
very true.
I don't know. I'm kind of intertwined on what I think because Netflix has really evolved in the last couple of years where Originally, they were just a streaming platform, you know, where they would just host already existing movies or TV shows on their platform for people. But then they made a shift in the last couple of years where they started producing their own content. And that's a really big change. And it costs a lot of money to do it, but it's been working out because a lot of their originals are actually really good. I mean, some of them are trash, I'll be honest, but some of them are really quality shows and movies.
Yeah, I agree. And I mean, they're going to just have to keep doing that to even compete with Amazon because Amazon's trying to produce their own stuff as well. So if they want to stay relevant in the space, I think they need to keep doing it. And you know, like Dave said, they do have some really good movies. So I think if you want like if you're building like a retirement account, I think Netflix is good. But if you're just looking for medium term or short term, I mean, stay as far away as possible. It looks like it might be topped out for a while, but long term they're not going anywhere. So very low return.
The risk tolerance for Netflix is not up to par with what I expect in my investments.
Lordstown.
The risk tolerance is not extreme, so it doesn't fit our buy box.
Pretty much, honestly.
It's an expensive stock too. What is Netflix at? Like 200 some?
Oh, it's like 545 now.
Dang, that's an expensive stock.
Yeah, it's up there.
If you were holding it since the crash back last March, would have made a little over $300 a share.
Not bad, not bad. Oh yeah, I definitely would have.
Easy money, baby.
It is not bad, but you know, if you were into Tesla, then it's like nothing.
Oh yeah, nothing compared to that roller coaster, that's for sure.
And also nothing compared to DoorDash.
You beat me to it. You beat me to it.
So DoorDash, like Beyond Meat, they just came out with like the poopiest of poopy, earnings report. Like it was not good. It was yucky. If you looked at that, you look like it was like turning in a spelling test where you spelled half the words and it like the words you spelled were like just terrible. So in their earnings report, they generated almost $1 billion in revenue in Q4. So, October, November, December of 2020. But they had a net loss of $312 million. So that means they must have had costs of like about $1.2 billion. And this equates to $267 lost a share, which is a lot. Anything more than $1 lost a share is pretty significant. And this is just during the fourth quarter. It's not even taking into account the entire fiscal year.
Oh, I can't wait.
If you take into account the entire 2020, they generated almost $3 billion in revenue in cash, which is pretty good. You look at that, you're like, that's a really good number. But then you look at how much they lost, and it is not good because they lost $7.39 a share, which that is a lot. Like that is a lot of money.
The tech bubble is here. This is the warning.
I'm surprised because I thought everybody was doing DoorDash because of the pandemic and all that good stuff.
Well, they are. But I think the thing is, there's so much competition in the space of food delivery that they have to offer deals in order to get customers. So like they'll be like, oh, if you order $20 of stuff, you get free delivery or something. I don't know what it is. I don't use it. But they offer those
too.
Yeah, they offer these deals and they just compete with each other, like DoorDash, Postmates, and Uber Eats. They all just have their own deals and they have it for like a week and they have it for a week and then they just like compete like that way. And that's just like chewing up money. So it's like whoever can last the longest is gonna live.
Dude, it's literally just whoever can spend the most money to get customers wins.
Yeah.
Honestly, I'm not surprised. I wouldn't be surprised if I see like a giant buyout. One of these big companies just buy each other out and then completely take away all the competition.
First person to sell would be the smartest company, though, honestly, because there's no way they can all last forever. I mean, realistically thinking about it, like the first person to sell out their company and just like take the money and leave is probably the smartest.
Yeah, that's true, but I don't think that'll happen. Like, I feel like, I don't know, that just probably won't happen.
True.
Because,
never know.
I mean, what kind of value would that, like if Uber Eats wanted to buy out DoorDash, what kind of value would DoorDash really bring to Uber Eats other than just like not being in the market share?
Maybe it's like the contracts with the restaurants, but like I feel like most restaurants have all of them anyway. I mean, maybe just the user accounts, but how much can that really be worth?
True. But I mean, like, also once we get over the virus, I think, and a lot of analysts think that the food delivery service is going to just completely tank because originally they were just meant to like deliver fast food, McDonald's, Burger King, Taco Bell, Wendy's, Arby's, whatever you wanted. And then once the lockdown started, they really expanded and started delivering like restaurant meals, from like Outback or Red Lobster or Olive Garden or whatever other generic restaurant brand. And then they also expanded to like delivering groceries as well. But once the pandemic is finally over with, which is probably going to be happening in the next couple of months, honestly, I don't think it's going to continue. I think it'll be completely over by September at the latest. So by then, I'm like, why would you deliver groceries and stuff? You're just going back to normal life. So I think they're going to lose a huge market share, and that'll cut down their revenue a lot.
So
Yeah.
sell.
Open up as many short positions as you can on any of these food delivery companies. They're all trash. Just leave the house and get food. Honestly, it's not that hard.
Yeah. Only way I would ever really use this is if I'm like studying for a test and I just can't have time to like go out and pick up food. But that doesn't really happen very often.
I've only used it when I've been like in a different city and I didn't have a car, and like the food's not walkable. But like other than that, I can't really see any value to it.
Yeah, or like you're at a party, had a little too much to drink, and then we're just like, I'm hungry, you just got DoorDash some food.
Oh yeah, that's true too.
True. But if you do that, make sure you DoorDash some for the homies too. Can't be
Yeah,
greedy.
always.
Don't be stingy with that McDonald's or Taco Bell or Whataburger or whatever. I guess it depends how late in the night it is.
In and out.
Taco Bell.
Ooh, those are all very solid options. But Airbnb is not really that solid of an option, and they're looking worse and worse every day.
Oh yeah. So we all know pandemic hit. Nobody was allowed to leave, so that hurt a lot of travel companies, airlines, cruise lines, Airbnb lines. So basically, in Q4 by itself.
What?
You like that, Dave? Airbnb lines.
Yeah.
Love it. Make a clip out of that one. Airbnb lost $3.9 billion in Q4 by itself. They lost a total of $4.6 billion in 2020, and they still have a current evaluation of $100 billion. They are worth more than the Marriott International Incorporate. I believe that's Marriott Hotels. So what does this mean for Airbnb? It means A, they are worth way more than Lordstown for no reason. They're losing money very rapidly.
We always have to get Lordstown into this episode somehow.
And obviously the pandemic is going away, so expect travel to start increasing. I think their stock is still gonna fall within the next quarter or two, and that maybe it'll start to increase. They're losing a lot of money. No travel is going on really right now. The big hot spots right now is like Florida and Arizona and all the states that are not completely frozen over.
Mhm.
But I don't know. Like Airbnb has its ups, has its downs. I'm not really sure if it's a buy right now. What do you guys think?
Dude, I don't even want to touch that thing. I mean, it's still up from where it was. If you bought an IPO day, you're actually still making money somehow. But I don't know. I feel like there's no way that's gonna last. I mean, they seem like they're in pretty deep financial trouble.
Yeah, they definitely are. I mean, if I lost $4.6 billion in 2020, definitely not looking good for me.
Yeah, but they lost the majority of it in Q4.
Yeah,
That's
apparently.
insane.
Oh my gosh.
Well, a majority of it was because of their IPO. I think they had to pay back a lot of the people that put money into the IPO, and that's where a lot of the debt came into. So,
It's still no small amount of money.
oh yeah, no, not at all. And I can't see why Airbnb is worth $100 billion because there's other companies that have, warehouses and, they have 100,000 pre-orders and trucks. And it doesn't make sense why they're worth 4 billion. And
I think it's
Airbnb
just,
is worth 100 billion.
I think it's just what they're generating, like for their hosts, like just based on the income they're generating, which shows that it's a really big business and it has potential. But hopefully they can hold their own in the space. I mean, there's no real direct competitors right now except VRBO, and that's not even on the same level as Airbnb.
Yeah, no, I think Airbnb is good if you buy at the right price. I think the next 2 quarters it'll drop because I feel like it's just overpriced in general because of how much travel has been cut back. If you can get it, on a nice like down day and hold for the next 2 years, I think you'll be okay.
Yeah,
Probably.
long-term portfolio hold, something you try to
Yeah.
retire on if they don't
It's
go
a hold.
bankrupt. Yeah, we'll give it a hold. Well, maybe if we check out the big winners and big losers, you can hold some of them, or you can just do a little short-term swing trade.
Ooh, let's hit that soundtrack.
Yeah. Hey.
Ooh.
Oh man,
So,
what do we got here?
That's my other baby.
yeah, what is it?
Workhorse Group Incorporated, ticker WKHS, up 24% today after dropping like 70% yesterday.
So it's still down 50%.
Yes, they're trading at like $16, bro. Dude, 2 weeks ago they were at $42.
All right, I'll throw it down on Workhorse.
I would personally. I bought some more yesterday on its big downtrend. So basically, what happened was they were in talks, and they were the leader, like the front runners, in getting a contract through UPS. And I guess something's happened, and UPS picked a different company to create their electric vehicle delivery trucks.
It was the USPS, right?
USPS, yeah. And it wasn't a full contract. There's still like other contracts through USPS that Workhorse can get, but it was still a pretty big one that they missed out on. And it kind of took everybody by surprise. So that's why there was a major sell-off yesterday. I still think Workhorse is a great company to buy right now at its current price. But I don't know. We'll see how it goes. I know it's going to go back up. It's just a matter of when.
Yeah, that's fair. Might be a good one if you're looking to get into like a short-term trade that isn't super high risk. I'd say, what do you think? Probably medium risk.
Yeah, medium risk. Like I bought in originally at $20 and then it jumped up to 42, and I was like, I thought it was golden, and then this news broke out. But I'm assuming the next big deal that they get, it'll go right back up.
We can only hope so.
Yeah.
True.
Also, side note, Workhorse owns 10% of Lordstown Motors.
Oh,
True,
I didn't know that.
yeah.
That's something new every day.
So buy Lordstown, buy Workhorse. They kind of come together.
I guess you think that way.
Yeah, something like that. It's a combo meal. What's number two? I've never heard of this company ever before.
Yeah, so number 2 we have GameStop. I'm sure everyone has a ticker at this point, but if you don't, it's GME, and they're up 18.5%. With honestly the majority of it coming up from yesterday's after hours. They kind of traded a little bit. They went up a little bit and they just kind of crashed toward the end. So the majority of the gains were just from yesterday and just kind of trickled on to today. Yeah, we already talked about it mostly. It's just people buying in, and the CFO got chopped out of his spot by Mr. Cohen himself, the founder, or not the founder, the the Chewy guy. Chewy.
CEO. Oh yeah, Chewy.
Mm-hmm. So he's making some big changes to the board of GameStop, and people think it's going to be pretty good for the board to be changed, and they believe in Mr. Cohen. So we'll see if Cohen has the ways.
We'll see if he turns around the bankrupt company now that he has the stock capital to do it. Those executives' net worths must have gone through the roof last month. So funny.
Honestly.
But well, maybe if they can't do that, they can get a loan from this first big loser to stay alive.
Yeah, so the first one on the big losers list is Lending Tree Incorporated. TREE, like a tree, somebody you plant in your backyard, and they're up 15.5%. So Lending Tree, they offer services to find loans, credit cards, insurance, and really other things, and try to compare the rates to find the best product for you as the borrower.
Ooh,
Respect,
peer-to-peer
respect.
lending. I dig it. It's a very up and coming. Probably a good alternative to other predatory loans because at least there's some form of regulation online. But yeah, there we go.
True.
I'm a tree.
Might be a buy. Yeah, TJF tree.
TDAF Tree. And then number 2, we have tele-health Incorporated, TDoc, and they are down almost 14%. Telehealth, I don't know. I feel like it's an interesting innovation, but I don't think it really is going to replace patient-physician face-to-face interaction for the most part, at least. I think
Yeah.
telehealth is really good for the really elderly population and the really sick population that really can't leave their house or bed rested. I think that's a really good innovation. Instead of having like the physician come to, retirement homes or, recovery centers, they can just telehealth in and check up on the patient that way. But I don't think it's ever going to replace like a family doctor. That doesn't seem like it's going to ever happen.
Yeah.
I agree.
Yeah, I would agree with that assessment. It's convenient when you need it, but it can't be replaced entirely. So at least it's more
Exactly.
efficient for the doctors, just because we need them right now with all the stuff going on.
Exactly. Yeah. And because, people are predicting it's going to be over pretty soon in the next couple of months, that the stock outlook is not too hot because membership is probably going to go down quite a bit, to say the least.
Yeah, a lot of these stocks that became popular during the pandemic, future is not looking too bright. So make sure you just be careful what you're buying.
Exactly.
True.
Yeah, which makes sense. But let's check out some of these sleepers. I'm feeling a little bit sleepy.
Sleep. Oh,
Sheesh.
whoa! Where did they come from? Holy David! I always talk about them. You're my CFO and marketing head. I want you to take this one.
Who wrote this?
Yeah, so number 1, we have Lordstown Motor, RIDE. And it is my opinion that they are really undervalued right now. It's like criminal how undervalued they are.
Criminal.
'Cause
Holy.
because of all the things they've kind of reported. So one of the big things, not the biggest, but a big thing, is that they have a 6.2 million square foot factory in Ohio. It's a massive factory. It's one of the biggest in the country. And this thing is capable of producing over 600,000 trucks per year. They have, retooled it and revitalized it to produce EVs instead of combustion engines. So 600,000 vehicles per year is quite a lot, honestly, especially when they are retailed at, I think it was 53,000, 52,000.
52.
So that's like $30 billion right there in sales, in revenue. If they were to sell all 600,000, which, yeah, I don't know. Maybe they could. I don't know. But right now they have 100,000 pre-orders for the truck, the Endurance, and that equates to about $5.2 billion in revenue, which is quite a lot of money. That's just for the base model. It's not like for any upgrades or anything like that. So that's a lot. And right now they're only valued at, I think it was like 3.4 billion or something right now.
That's
Dang, they'd be selling
nothing.
more than they're worth.
Yeah, exactly. So, I mean, these pre-orders are not like binding, so they could, obviously not be executed or whatever.
Oop.
But I don't think, even if they sell like half of them, that's still $2.5 billion or $2.75 billion in revenue, which is still really significant.
Oh yeah.
Yeah, I would say so. That's pretty crazy.
Also, another
But-
side note, they also are working with Ohio legislation to get it passed to be able to sell their Endurance directly to consumers. So they're also taking the consumer route as well, not just what's it called, commercial fleets. So that's another thing that can also happen.
Yeah.
Dang. Okay, I'm with it.
So buy. Like, trust me, it's a perfect price. $19, wickedly undervalued. I'm telling you, this is $100 billion stock right now, worth way more than Airbnb for who knows what reason. They're worth $100 billion. Buy them. Trust me. I'm not a financial advisor, but I put a lot of money in. David put a lot of money in. Austin, we're trying to get him in there. We're bullying him, but he'll put some money in too. Big gauchos.
every day of my life.
Yeah, you know.
All right, that's the end of the episode.
I mean, yeah, you know, we've been trying to get Austin to buy it, and he's been really reluctant. So recently, we came over to his house and we destroyed his anterior tibiofibular ligament in his foot in order to get him to buy the stock. And now I think he's starting to crank a little bit, and I think he'll put some money in.
Yeah, I'm already. They put me on crutches for 3 to 4 weeks, and got about 6 to 8 week recovery time. So should have enough time to sit home by Lordstown now. Thankfully, thank you guys for the opportunity.
But yeah, I've been into the stock for a long time. I think since October, maybe. I think it was October I first got in. I don't know, but I've kind of figured out the trend of the stock. And what ends up happening, this is a little bit extreme. They usually don't ever go below $20 or $22, but they'll trade around $20 or $22, and then they'll jump up to about 30, and then they'll just drop down again. So people are definitely riding the train. But there's a lot of institutional investors that are really getting in. What's that one? Oh, Morgan Stanley. So Morgan Stanley initiated a price of $18 a share is what they thought was the fair value of it. And that was really undervalued compared to all of the other brokerages that, you know, released their expectations. And it caused the stock to just dump down a lot. And then we found out that Morgan Stanley actually bought into the stock when that happened. So, you know, there's a lot of really big players who are into Lordstown Motor, and they have faith in it. So you should have faith in it.
Yeah,
Absolutely.
make sure you go check it out, and maybe I'll get a buy update on the next episode. Maybe I'll buy some. Who knows?
We'll hope so. But while we're at it, number 2, we have SeaWorld Entertainment. It is SEAS. And, you know, SeaWorld is pretty awesome. You can go and visit the whales, the fishes, dolphins. I don't know what else they have, like clams or something, maybe.
Probably turtles.
I don't know. It's a cool place.
Well, they have a roller coaster. I don't know. I haven't been there in like at least 10 or 12 years.
Yeah, me
Yeah,
too.
it's been a while for me too, but they're a cool place. You might check it out.
Pretty interesting. But you can also check out number 3. I think this was kind of obvious this was coming. The theme of the episode, GameStop. Ooh. Not too hard of a pick. Basically this is just up there because of gambling. We hear big gauchos. You know, we do like to gamble on the high risk stocks, you know. It's kind of our favorite thing to do, you know, no risk, no reward, as they say. So check out GameStop if you're feeling a little risky. Just don't buy on a green day when it's up like 100% in one day, because you're going to get screwed.
And also, don't let those boomers bully you. They say that we're not smart investors by investing in GameStop and making money. We're just gamblers, but that's not true. We're just smarter than them.
And gamblers.
True, we're just a combination of both.
No reason why we can't be both, but no reason why everybody can't use Anchor, because it's the best podcasting platform out there.
True that.
Ooh.
Let's hit that ad. Banger. Well, no new additions to Bankruptcy Boneyard. We're getting really close, I feel like, on some companies, but hopefully, well, or not hopefully, we'll have some to add soon.
Jesus, Austin. Holy.
Well, you're the one who said, what'd you say last week? Good for the heart and good for the pocket.
Yeah. That's not good for anybody.
Well, Ruby Tuesday isn't good for anybody either, and we're never going to get there.
Lordstown is good for the heart and the pocket.
Oh, yeah. 100%.
That's I'll give you that. Well, as far as the Dow game goes, Canal did take the dub today, but there's been a little change on the leaderboard. Now sitting at first place. You know, I didn't get to brag about this because it happened yesterday. So, you know, I'm kind of reveling in my own glory.
It's all right. It's all right.
It happens. I picked 31,402 for tomorrow,
I
but
see.
free
Dave,
game
see.
since Canal picked.
Dave,
All
you
right.
can go.
Yeah, so I think we should implement some new rules into the DAO game.
What
Oh,
are we
really?
thinking?
I think. Okay, so hear me out. I think it's fair that we should implement a rule stating that you cannot pick the closing date consecutive days in a row.
Okay, I'm down.
I don't know, bro.
you're just saying that because that's how you got to the top. You just because I'm picking the close dates.
I don't know. I mean, you do it too.
Not very often. I don't.
I do. I did a lot.
Yeah,
Tyler did it a lot. I did not.
Tyler did
I'm
it a
still in
ton.
last.
Actually, Canal did it a ton too.
He
Now,
did.
Canal just plays a margin.
He does, but he plays. Yeah, he plays whatever's the biggest margin, honestly. But
Under consideration.
Or should we have instead of 100-point differential, 150-point differential?
why it's even bigger?
Well, I mean, think about it. I've been noticing the past like week, we only go 100 within each other, and like to a small gap. Maybe we should widen the gap a little bit more to make it more interesting.
I don't know.
Yeah,
I mean,
but
it's
the
not,
DAO doesn't
the market doesn't
swing.
swing. Yeah,
That
it
is
doesn't
true.
swing enough to justify.
So if anything, you'd want to
150 point.
lower it a little bit.
All right, let's lower it to 50 points differential.
Dude, no, that's gonna be so hard.
I mean, okay, I'd be down with 50-point differential.
No differential. You can pick the same number.
What?
No, I think 50
Everybody
is fine.
wins.
I think 50 is fine if we want to do it like that.
Yeah, we'll ask Canal what he thinks.
Yeah,
Sounds
we'll
good.
Include him.
do it. Well, yeah, we'll not consider it until after the weekend's over, until Monday. But
Sounds
For
good.
sure. What do you boys think for tomorrow?
so you did the close rate.
Yeah, of course.
Okay. I mean, it dropped down a lot today, so I'm pretty sure it's going to bounce back up. So it's not going to bounce up to 32,000. I'll tell you that much. But I think it's going to go up to about, let's go with 31,650. It's a pretty good number.
Yeah,
Yeah.
I'd say, especially because it's in a pretty big slump today. So never know.
I'm thinking 31,755.
Respectable. So that means Canal should be like 31, like 5 something,
No, he's gonna be 31.3.
or
Man,
that.
man.
He's just waiting to pounce until we text all the numbers.
Waiting to
Seriously.
pounce.
All right, we should do it one time where he picks his number and then we completely change our numbers up just to go around him.
You just sandwich Canal. But like wait until 7:29 a.m. Oh man, that'd be funny. Well, I guess you guys are gonna have to come back and see what happens, and if we change the rules. I want to thank everyone for listening. Hope you enjoyed the show. This voice message on anchor.fm/gauchos or biggauchos.com. If you want to send an investing tip, we're gonna put on the show. Tyler, do it.
All right, Big Gauchos, quick disclaimer because we love disclaimers. We are not licensed brokers, and everything said on this podcast is from our experience, is our opinions from our experiences. Please do your due diligence and invest safely, Big Gauchos, because we are not liable for any lost gains, but we're directly liable for all major gains because we love to make money with y'all. That being said, we'd love to thank all y'all for the love and support and coming back to watch our videos every time we post. We're about to break 12,000 views because of y'all, and like and subscribe. That being said, Dave, let the viewers know our amazing Instagram.
All right, listen up, guys. So our Instagram is, I'm sure you guys heard of this from now, but it is at Big Gauchos. We also have a TikTok that's called at Big Gauchos. So if you have one of those two apps, or maybe both of those apps, come and check us out. We post some great content.
We're so close.
We post clips of the podcast and also some funny bloopers every now and then. So come over and check it out. Drop a like, send it to your friends, maybe your mom and dad. I don't know, whichever you guys want to do. But yeah, come and check us out. We post some great stuff.
All right, here we go. Make sure you also take us on the go on streaming services. We're on Apple, Spotify, Anchor, YouTube, Google Pocket Cast, Breaker, Radio Public, Overcast, or you can add us to your own RSS feed. Make sure if you are listening on Apple Podcasts, especially with a rating 1 to 5 stars, do not accept anything less than 4.5 stars. And leave us a review. Tell us who your favorite Big Gaucho is. Send that time code to a friend. Tell them what to listen to, and share that streaming link. We got anything else to add, boys?
To the moon, boys.
Yeah,
Lordstown.
Lordstown to the moon in 3 years. That's a
Yep.
quote.
Yep. GameStop, long-term hold positions only. And good night from Arizona. Hope you made some day. Peace.